Good morning, everyone, and welcome to this morning's session. And just a couple of things before we start. First of all, obviously, we have the disclaimer. I know you've seen it all before, but please, we do like to say this every time we start one of these sessions. This can be a very risky business. Please do not use money that you cannot afford to lose. And the other thing I'm going to make sure is, last week I seem to have spent an awful long time talking at it because for some reason you couldn't see my screen. So I'm just going to, let's have a look. There we are. Right. Can you see my screen? Yes, a beautiful, beautiful chart that we have up there at the moment. Okay, welcome. If this is the first time you've come along to this session, you will have received an email to show that we've obviously had done a number of webinars already. It's myself and my husband David, and basically we are following, we're not following a program, but we're looking at obviously volume price analysis, we're looking at chart structure, we're looking at the price cycle, what David and I call C states of the market, all the things that you need to know to be able to identify what a chart is telling you in the time frame that you have under consideration for potentially taking a trade. So if this is the first time here, I'm not going to go over that. May I suggest you go over to either my YouTube channel or the Quantum Trading YouTube channel and just watch the first 5, 10, 15 minutes of those videos. You're more than welcome to watch them all, but it will just fill you in on these topics if it's the first time that you've come across, say, an expression such as C state. Now, before we start, let me just pass over to David, and we've got a number of things that we want to sort of build on that from these sessions, and I'll let him say hello first, though.
Hello everyone, and a very warm welcome wherever you are in the world. It's early morning here, but wherever you are, whether it's afternoon, evening, you're very welcome to join us this morning, and good to have you here. If this is the first time you've attended one of these webinars, we do run it as a two-hander. We focus predominantly on the MT5 platform, although I also run the NinjaTrader platform on my side, so we do flip-flop between the two of them. And there are many differences between the two. The MT4, MT5 route is a very simple, straightforward route to get into this business because it is it's a complete package, if you will. It's a bundled package of platform, of live data, and also of brokerage. So you really don't have to put all the elements together, whereas with NinjaTrader you do. The nice thing with the MT5 option is that it opens up a lot of other markets. MT4 is very spot forex specific, whereas the MT5 is a multi-asset platform, and it allows you to trade all the markets pretty much, indices, commodities, even stocks, cryptocurrencies, if you will, and of course forex. And it does it in a very cost-effective way because the margin requirements for trading those markets is very small when compared to over on the NinjaTrader side, for example, where you're trading true futures contracts. The margin requirements are pretty heavy because you are trading, even a single contract is quite a large commitment in terms of margin requirement. If you have any questions, please just drop them in the chat box. We're more than happy to answer them there, or if they're long questions, we will answer them on air for you. I know a lot of you come along regularly. We do have two small dogs, Bertie and Harry, who do like to join in from time to time. If they do, we generally switch off and wait until they've finished, but they're asleep under the desk at the moment, so long may it continue. I'm going to pass back to Anna, and we will get going.
The last couple of sessions we've been looking at support and resistance. Obviously, support and resistance is a huge part of technical analysis, both classical technical analysis and also part of volume price analysis. It's one of the 5 pillars of VPA. But the question that we always have to try and determine with support and resistance, whether you draw support and resistance manually, whether you draw it vertically or whether you draw it horizontally, and by vertically I mean with use of trend lines, whether you use a moving average, however you decide to frame the price action, the price cycle on your chart in terms of support and resistance, there are many ways of doing it. Or you use one of something like one of our proprietary indicators, where on the MT5 platform, or the this is a screenshot from our NinjaTrader platform. The question then becomes this: it's fairly straightforward, as I said, to draw these lines on your chart to give the price action some kind of framework. The issue then becomes is, well, which of these levels are perhaps more significant than others? Because David and I always say that we characterize this market another way. We say it's a market of levels and flow. All market levels are important in all markets, because levels, technical levels, something like the gold chart I mentioned last week, the 1200 per ounce level is hugely important. It's where the gold has bounced off on, previous occasions. So you'll always find, if you like, buyers lurking there, waiting for that level to be reached, and then they will step into buying. There'll be all sorts of reasons. There'll be a technical reason because it's bounced off there in the past, and there'll also be this view that when a market, an instrument reaches a certain price, it's considered fair value, it's considered cheap. Stocks particularly fall into that sort of a category. With forex, it's like we have this the same, in the sense, if you like, it's cheap. Who is it cheap to? Who is it who is looking for that a currency pair to reach that level? But that's that would be the institutional banks who actually have a job to fulfill in this market. They will have clients who are looking to exchange huge sums of money. May have been quoted one exchange rate, and the banks then do all they can. First of all, they're committed to that exchange rate, but in the meantime, they will try and make some money for themselves on top of whatever commission they charge their clients. So they will invest in this market, in inverted commas, to either drive the price down to a particular level or up to a particular level, and then reverse it. That's part of the one of the drivers of this market. So the levels that we see on our charts, and particularly, as I said, with forex, because you have this additional driver where you have these huge institutions who are looking to push the price in one particular direction for themselves, for that particular, that one reason. As I said, they have clients that they may have quoted an exchange rate. That is what produces the flow. So you have levels and flow. But as a retail trader, we're on the outside looking in. We then have to try and determine which of these levels are more significant than others. In other words, we have to understand what the hierarchy of these levels are. So, which are more important, perhaps which are of less significance. And this is where a lot of traders like to use something like a Fibonacci. There's lots of other tools out there. There may be, you approach it using Elliott wave, or you use pivots. We actually use our proprietary indicators, as I said, and David will explain a little bit more in detail how the NinjaTrader works. Those are the lines that you see on the chart. And we also have an indicator called a Camarilla. Camarilla levels they came out of floor pivots, and we've develop this specifically so we can put some kind of hierarchy, so we can try and deduce which of levels are likely to be more significant than others, where price is likely to stall, where it's perhaps going to break away from, or where it's likely to reverse. Now, today I'm not going to talk about the volume point of control. That I'm going to talk about that next week, because that's another indicator that we've developed where we actually have volume, price, and time. And of course, the indicators, we have to use them in conjunction with our very fundamental methodology of volume price analysis. So that's the chart. Now, that's looking at one chart in one time frame. What you then have to do is in order to give these levels that you may see on your chart perhaps extra weight, is we have to look at something called confluence. I'm sure you've heard this expression before, and that is, in multiple time frames, you have to use another time frame, a slower time frame from the one that you're looking to take the trade on, and see how does perhaps a level that you have spotted on your chart, how does that perhaps compare, relate, contrast with a level on a slower time frame. And in fact, that's how you have to use Fibonacci. Fibonacci, from what I've read about it and from what I can understand, is you place your grids, but you do it in you start at the slow time frame and you go down to a faster and faster until you get to the one that you are looking to trade. And when you have a confluence, in other words, you have a certain level, a certain fib level, corresponding at a certain price, well, you know that perhaps that is going to be very strong in terms of support and resistance, so that if price is going to get there, it's perhaps going to struggle. And that's where volume price analysis comes in, because we know what volume does. It will validate what you're actually seeing on your chart. So that's what I'm going to stop there now, because I want to move over to David. This is a screenshot that, before we move to the live market, this is a screenshot that actually we put up on in our Trader Chatter group. This is the traders who are participating in our forex trading program, because it came out of a question that from one of our students who perhaps who just wanted a sort of a more detailed explanation of how the interaction of VPA, how to read it, if you like, in the live market. We can see it's a fast chart, it's a 5-minute chart, but it really does explain everything I said in terms of using support and resistance, which levels are likely to be more significant than others. And the reason we put the Euro-Aussie up, because there's been some really nice development on this particular pair overnight, and if you are an Aussie trader, you are going to have to be very aware of what's going on from a political aspect in Australia. I think Australia has ridden the financial crisis pretty well, actually, over the last 8 years or so. Obviously, China is its biggest customer, but things are not looking too happy down under at the moment. Certainly not if you're a rugby fan. But the less said about the better. That's about the better, I think. But I'll let David explain about that.
Yes, I'm sure for Aussie attendees, you're well aware of the Bledisloe Cup, but we will pass quickly over that. Which we do follow. So you have our commiserations, and the England cricket team is not very much better, certainly in the last few days, at any rate. Just to pick up on what Anna said, bear in mind, yes, this is a screenshot. Yes, this is looking historic, but actually this was taken off the live market. Now, one of the nice things with NinjaTrader, one of the differences, one of the real pains with MT4, MT5 is the time horizon that you get with the platform, because it's actually quite difficult to identify things that happened in the market at a particular time, because they generally run 2 or 3 hours out of sync. And that's down to servers and the brokers that you're dealing with. The nice thing with NinjaTrader, you can see at the bottom here, hopefully you can see it okay, is that this is actually the actual time that things occurred. So down at the bottom, the period that you're looking at, this is a 5-minute chart, Euro-Aussie, ran from roughly 7:30 UK time. In other words, halfway Europe's open, we've got half an hour to run to London, then we're into London 8 o'clock, and this really extends almost through to the US Open at 1 o'clock in the afternoon our time. So we've gone from sort of 7:30 our time to almost 1 o'clock in the afternoon our time on this chart. The reason we put this up was because, as Anna said, it was a question that was raised in the group, and it was really just to highlight the biggest issue for traders is it's not really when to get in, it's not really understanding how the markets work. The biggest issue of all is actually holding a position in the market once you've got one, and in particular where it's a profitable position. because once the market starts to reverse, which every market does in every single time frame, that is the point at which emotion kicks in. That is the point at which you're under the most severe pressure, because you have mentally banked the profit that you thought you had, which you're now starting to see ebb away. And at that point, the emotion is the most strong, and the emotion is to close out and take what you have off the table and run for the hills. It's perfectly natural, perfectly normal. That is the biggest thing we have to combat all the time, because rest assured, generally what happens is the market pauses, the market reverses, and then it continues in the original direction. And the reason for that is explained in the program. We've covered it several times already in earlier videos. But the market goes through these phases of primary and secondary all the time. So the primary trend, whatever time frame you're trading, if the primary trend is bullish or bearish, and then you get a secondary reversal, the key is to try to understand and identify whether that is a true change in trend. In other words, the primary trend, so we're seeing a change of primary trend to primary trend, from bearish to bullish or bullish to bearish, or is it simply a minor pause point, in other words, a secondary reversal into a congestion phase or a temporary pullback against the dominant primary trend. Now, when we talk about primary trends, you can have a primary trend in a 1 minute and you can have a primary trend in a 1 month. All price action is self-similar. It doesn't matter. It's exactly the same whether you're looking at a 1 minute chart or a 1 month chart. So this could be any time frame, makes no difference, just happen to be on a 5 minute time horizon. And it really does bring together a lot of elements of volume price analysis, and perhaps the most important element of VPA, which is helping you to understand what is going on in these reversals. And it also highlights the other aspects of volume price analysis, which is the whole business of support and resistance, which we've covered in a lot of detail, again, in the early videos. But you can see it at play here. But if we start with the VPA aspects of it, and I can see that Dick's asked a question about the candle 10 back from the right-hand side of the chart, which is that one. If we start with the initial move higher, and it was really a question, as I say, to address this issue of the two issues actually. First of all, I'm in a position and I've been frightened, or I'm in the process of being frightened into closing my position. You know, what is your analysis at that point? And secondly, for those who've been trading Euro-Aussie, and we have for the last few days, it's been rising very strongly and continued to do so. The second issue is, do you have the confidence to take a position in a market which has already moved strongly in one direction or the other? And that is another issue. And I'm always reminded of Jesse Livermore. You know, no market is too high to buy and too low to sell, which just hits the nail on the head. It's absolutely true. Your mind will tell you that you've missed the big move, and you know this is bound to reverse because we've had 2 or 3 big up days or 2 or 3 big down days, and therefore you know it's not going to continue. Well, that's your brain telling you. It's not an analysis of the market.
It's the last 10 years of equities, is it?
Yes, exactly. As Anna turned around to me and said, the last 10 years of equities. You know, it's everyone's saying, well, it can't carry on. Well, you know, who says? Anyway, that's beside the point. Just to walk you through this chart, we had the congestion, and bear in mind this is only one chart. You would be looking at this in multiple time frames. You would have had this on 15, you would have had it on 30, and it would have been telling you all sorts of different things, and really one confirming the other. But on the fast time frame, obviously what you're seeing is the initial reaction, which may or may not then be confirmed in the slower time frames that you're considering. Here the market was, you know, it had a rally there to the left-hand side. It was moving gently higher. Then we move into a congestion phase, quite an extended congestion phase of a couple of hours or so. The support and resistance levels are coming into play. The pivots are telling you that we're moving into congestion. The trend monitors transition. We've gone from what was bright blue, we've gone into these very much darker transitional colors. We're flip-flopping around in here, and we're wondering what's going to happen next. The market then rallies again. we break through what was the ceiling of resistance at the upper level, around about 157.64, 63 region, and we carry on up. And if you note the volume on that little rally, so you've got 3 or 4 up candles there, but look at the volume. The volume is not strong. It's okay. It's in agreement. But note how it's starting to fall away, which is giving you a signal that perhaps this isn't going to go too far. It's not telling you that it's topping out right now, but it's certainly giving you a signal that perhaps this isn't terribly strong, this move at the moment. We then move across to the next 3 or 4 candles, and then we get the signals that start to come in. First of all, where Anna's cursor is right now, that's the first signal. What are you seeing? You've seen quite a big pickup in volume below, so you've got almost 3 times the volume you had of the previous green candle, that little last one there. And certainly on that one, it's double or 3 times. You've got a wick to the upper body, and you've got a relatively narrow body to the candle itself. So it's not telling you there and then that the market's going to suddenly collapse, but it's a first signal of initial weakness as we've marked it up there. So that will be your first warning signal. You would be paying attention, you'd be seeing that and thinking, okay, I'm seeing high volume, the price hasn't gone. In other words, we have an anomaly in terms of price and volume, because if that were not an anomaly, what we would have expected to see is that candle should have closed at the high of that session, or indeed higher still, because given the amount of volume, you would expect that candle to be wide and up, and it isn't. It's relatively narrow, and you've got a deep wick to the upper body, so it's only gone halfway. We then continue. The next candle is a down candle. We then get a little doji. Okay, we've got indecision, we're moving into possible congestion phase. Then we get the next candle, which really does confirm the weakness that we saw 3 candles earlier. Big wick to the upper body, lots of volume under it, and it's just giving you yet another signal that we are seeing some short-term weakness here. And we've also got a pivot signal on the top of it, so it's just sitting astride there, and that would have come in after the next candles completed, just confirming that we've got higher highs on either side and higher lows on either side. The market then starts to sell off, which shouldn't be any great surprise having seen that particular pattern of price action. Now at that point you're looking at it and you're wondering, well, what am I looking at here? Am I seeing a major reversal in my longer term trend, albeit this is a 5-minute chart? Or am I seeing a secondary reversal develop against the primary bullish trend? And as that pattern of price action builds, first of all, these candles are not wide. They're relatively narrow in spread. So whatever's selling, the selling pressure there doesn't look particularly heavy, because if it were heavy, they'd be wide and the market would be moving fast. It's not. They're relatively narrow, and the market is just sort of stumbling lower. It's not collapsing, it's not moving into a price waterfall. More importantly, however, is that as that price action develops, so the volume is falling also with it. And what that means is that where you have a falling market and falling volume, they are not conducive to a market that is going to collapse. In other words, what that is telling you, because markets require effort to rise, which we're all familiar with because we're all familiar with the gravity, that it takes effort for something to get off the ground, which we all understand intuitively. But for a market to fall also takes effort. It takes volume in exactly the same way. And if that volume isn't there, that market ain't going to fall very far. And that's one of the most powerful applications of VPA, because what it's telling you loud and clear is that this is a secondary. This is not a primary reversal. We're not going from primary to primary. We are simply looking at a primary bullish trend higher that is now moving into a secondary phase of price action. Why? Because we've got a falling market and declining volume. And that is a clear signal. Yes, this market's going to fall, but it's not going to fall very far. We then move to consider support and resistance. We've got a platform there. This is NinjaTrader, but it works. This is price-based action, looking at support and resistance through the prism of how often a region's been tested from above or below in terms of whether it's blue or red. And of course, once those levels have been breached, they then act in the opposite way in terms of potential support or potential resistance. It sits on that platform. Notice also that the trend monitor has now transitioned. We've gone from the bullish phase, we've gone into the darker colors, and indeed midway through that it starts to transition into a darker red. And at that point you might be thinking, or bright red rather, sorry, apologies, you might be thinking, hang on a minute, I think this is going to reverse completely. Now bear in mind this is a 5-minute. On the 15-minute, I'm pretty sure from memory it hadn't even started to register the fact that we moved into a congestion, or perhaps it had changed on the last couple of candles. I can't remember from memory, forgive me. But that is one of the reasons that we use multiple timeframes for all the aspects of volume price analysis, but also from the indicator perspective as well. We then transition back into the darker colors on the trend monitor as we start to pick up a little bit. We then come to this candle with the deep wick. Now at that point, you'll be looking at that, you'll be looking at the volume under it. The volume is not particularly high. Yes, there's a little bit of weakness there, and certainly once you look at the framework of the previous candles, you might be thinking, well, actually, this doesn't look terribly strong. So you would certainly have some question marks at that point as to whether this was indeed going to congest further or whether this was going to roll over completely. The next candle then really is a strong signal of strength, because you've got a nice, very strong widespread up candle, minor wicks to top and bottom, and some excellent volume, in fact the highest volume of the session. So clearly this market is not one that is ready to roll over yet. We've got a lot of buying coming in there. The insiders, the market makers, the big operators have moved in there and picked up the pace, and they're just going to force the market higher. So that's a strong signal that what we've witnessed previously, and bear in mind you've sat through, this is a 5-minute chart, so we're talking about an hour or so of price action now. You know, that's a fairly reasonable amount of time to be wondering whether a market's going to carry on or not. But in doing that analysis, it gives you the confidence to hold that position and not close out when it's not required. The market then carries on, and we see the next 3 candles. We then see a repeat. What have we got? Once again, we've got a falling market with the 3 red down candles. Spreads are a little bit wider, but look at the volume again. The volume is falling. Is that a market that's going to roll over and develop into a price waterfall? Answer no. Why? Because again, you've got a market that's falling, but it's falling under falling volume. So that is telling you only one thing. This market is not going to fall. It's not ready to fall. There's not enough selling volume in there for it to fall. It's just another temporary pause and reversal point, this time within the congestion phase. Then we start to see the market pick up. Got 3 or 4 nice up candles there, decent volume under them. We've got a platform of support below, and of course what you'd then be looking at, certainly across the multiple time frames, is you'd be looking at the area of resistance that might be building on the slower time frames, certainly around that level that the market was trading at then, which was 57.80 odd. You know, if there was strong resistance there, that might cause you some alarms to consider. And if that was taken out, then that gives you a big comfort boost, because you've then breached a very strong area that will give you protection in the event of a minor reversal as you move on and up to the next level. Now, all of that was done in real time. Since then, we've seen Euro-Aussie move up pretty strongly throughout yesterday and into today. Yeah, I can move on to the live charts. And as you can see, finally, just to round off on that, you saw the trend monitor there transition through to bright blue ultimately, and back to the bearish trend again. Let's just flick that up. This is the Euro. Yeah, I'll carry on. I'll just change this. I just wanted to highlight this. I'll flick it over onto the Euro-Aussie in a moment. This is, if you like, another example of the whole issue of levels and price action and price phases, and what we're looking for in terms of our individual approach and tactical approach to trading the markets. The chart up there, yeah, that's fine. And this is at a really interesting phase. This is Euro-Yen. This is on 15. There's been some quite strong Euro buying, and we've had a lot of Aussie selling this morning as well. But if you're looking at this as a breakaway trader, congestion phases are the most important area of the market to consider, because from congestion comes trends. And this is a classic example, say 15-minute euro yen. We've moved up into this phase. We have this very strong ceiling of resistance overhead, very strong platform of support below. And really, the only question is not if this market will break out, when it will break out. And to answer that question, it's just a question of being patient and waiting for that to happen. If it breaks to the upside, fantastic. If it breaks the downside, fantastic. That's all it is. It's just a question of patience. But it's just a really nice example of if you want to trade reversals, or you're trading the market as a breakaway trader, just trading that particular market at 15-minute. Let's just change over here. This is the Euro-Aussie. This is on 15. I just scroll back to where we were yesterday. I think it was, where are we? Here we are. This was yesterday. So that was the sort of price action that you were looking at. We then had the Fed over here with this big spike in volume, which was 7 o'clock evening our time, through to the middle of the night and overnight. This is 1 o'clock now in the morning our time, and we've seen this very strong move away through these various regions. All these platforms held. We've broken out through here, and we've carried on higher for the pair. As I say, that's on 15, but if we go down to, we can go to really look at any time frame for that one, go down to 30, and it's a very similar picture. And of course, you're getting different perspectives all the time. And really, this just highlights the way the trend monitor behaves. You saw it on the 5-minute chart, how obviously it does reflect that particular time horizon. And where are we here? We're through this sort of region here. You can see it transition a little bit there, didn't really change very much, maintained bright blue. Then we move into the darker blue, even to darker red here, because we're now talking about quite a long period here. But then we've transitioned back into bright blue, and we're just staying bright blue for the time being. We've got a big volatility candle up here, which is another of the indicators, very strong signal that we anticipate the market to move into a congestion phase, which is exactly what it's doing right now. And the reason it's so powerful is because what it's signaling is signaling two things. First of all, volatility. Secondly, it's signaling market participators, the insiders and the market makers, are looking to trap traders into a weak position, because volatility and market makers go hand in hand. And when you see the volatility indicator triggered, what it's telling you loud and clear is expect congestion. You may even see a strong reversal, but at the very least expect congestion to develop, because the market will almost always revert back inside the spread of the candle. We had another one over here, it's a classic one, big wick to the upper body, and the price action reverses back into the spread of that candle for some considerable time. And just imagine the amount of emotional pressure you are then having to deal with in sitting through that extended congestion phase. It's not always about reversals taking you out. A lot of the time it's congestion placing huge pressure on you emotionally to close out. They will use every trick they can. Let's just have a quick look at the CSI. This is the CSI on 15, which of course is part and parcel, which is one of the key indicators that we use all the time. The currency strength indicator really gives you the heads up as to what is going on. It's a snapshot, if you will, of the building blocks of the market, the individual currencies themselves. What are the individual currencies doing? And from there, you then move over to the currency array, the currency matrix, the currency heat map, and your charts to really get a feel for the particular pair of interest, and whether that sentiment for the currency itself is actually universal across the market. You can see here I've got these on fast time frames on 15. This is the dollar, the red line. You can see we've got pretty heavy, we've had a lot of dollar buying certainly through last night, but we're now starting to see the dollar sell quite strongly, so the red line is falling quite strongly. And as a result, you would certainly be looking at several of the major pairs to see where that is reflected most strongly in terms of an opposing currency rising quite strongly. because what we're looking for is opposition all the time in terms of the two currencies. We're looking for one that's rising strongly and one that's falling strongly. Here you can see we've got the euro. We've got a lot of euro buying at the moment. Now, what's interesting, having come from the Euro-Aussie, of course, is that when you look at the euro, which is rising strongly, and equally the Aussie is rising strongly, the reason that that market for the time being is in congestion is because the two are rising together. So there's no opposing force to drive that pair. So if we would look at the Aussie dollar, for example, the red line, the blue line, terrific. If we were to look at the euro dollar, exactly the same. We've got euro rising strongly, dollar falling strongly. And, you know, to go back to the analogy where you're seeing the two fall together, if you were looking at the Canadian, this one, moving with the dollar, you wouldn't be seeing a great trend develop there. And finally, I'm just going to pass back to Anna very quickly. Just head over onto the currency array, which really gives you a sense of market sentiment for the Aussie. You can see here, I've isolated out, you can see how heavily bearish it is in terms of Aussie selling. But as we've seen with the CSI, the Aussie dollar is the most heavily oversold. The pound Aussie and the euro Aussie are the most heavily overbought. Now, we may be seeing those reverse. If you're a reversal trader on that particular time horizon, you may be having half an eye on these as a potential reversal, which may indeed, you as a reversal trader, may be trading the secondary reversal pullback in the primary trend, because all price action is self-similar. And whilst you as a longer term trend trader will be taking very little or no interest in that, intraday traders will certainly be trading it as a reversal or pullback against the primary. I'm going to pass back to Anna. Do you want to change screens?
Yes, and that's actually brings me on to my next slide.
Okay. We're going to change screens back to the MT5.
Really, at that point, that brings me to the next point that I wanted to make, and that is your approach to, let's say, to day trading this market. There are 8 primary currencies, and they make up 28 pairs. Now, compared with stocks, that's not a huge number to choose from. And when traders start in forex trading, in a way, it's because there's only 28. It's very easy to think, well, what shall I trade today? Shall I go here? Shall I go there? They really, they haven't formulated their trading tactics, and which is fine, because in early days of learning this business, it is very much trial and error. But at some point, you really have to decide how you are going to approach your day trading. Let's focus on day trading to start with, because it's slightly different if you are going to be looking to hold for longer than a day. Maybe you want to trade the slower time frames. And you have to remember, when we say longer term holding in forex, it's all relative. It's nothing like stocks. When we'd be talking maybe a few days, maybe a week or so, but we're not talking years here. You're not investing in this market. You're looking at price moves. But there's pros and cons for sitting in a trade in a currency pair for longer than a few days, a few weeks, even a few months. But just setting that aside, let's focus on, you're a day trader, you want to come to this market. What are you going to trade today? And you have really two routes, if you like, 2 options. The first is, and this is what we suggest in our forex program, particularly if you're not very experienced and or you're starting, and that is, depending on your time zone, look at a currency first. So if you're in Asia Pacific, if you're one of the currencies that you're most likely to look at is something maybe the Aussie dollar, because it's reflecting where you live. If you're here in the Northern Hemisphere and you're going to be predominantly in the London session, probably going to be looking at something with the British pound and maybe the euro. That doesn't preclude you looking at some of the cross pairs, because as David has shown in the Euro-Aussie, you are going to get moves even you know, in one of the currencies in the euros is the euro, which is why I say you look at a currency. And what that also allows you to do is when you look at a currency, not just one, maybe one or two, is you then have to begin to look at the fundamentals of that currency. You'll start with taking trades from a technical perspective, but eventually you'll realize obviously the fundamental news is hugely important. It's going to affect the price action, you know, short term and medium term. But if you are going to start, maybe focus on one or two pairs or even three, but certainly we always say no more than three. So you have your three pairs, and you know, you're going to have to do a little bit of trial and error to see which one suits you. What is in the program we talk about, each pair has what we call a volatility coefficient, which basically will explain what are they likely to move in any particular session and in any particular time frame. So they're all factors that are going to influence your choice of pair. So it's going to be time zone, when you're going to be at your screen, which of the pairs are going to be more volatile or not. Do you want to trade a more volatile pair? Because a very volatile pair, you may have to go to a slightly slower time frame. There's all sorts of factors, but let's assume you said, yeah, I'm not very experienced, and I just want to start with three. So, and here we are in the London session. So which three are we going to look at? Well, cable is probably an obvious one. Are you going to put a cross pair in, and maybe you're going to use trade euro dollar or even Aussie dollar, because although the Aussie is obviously you know, comes to prominence for us in the overnight session, it is still quite heavily traded throughout the 24-hour session. So that should be your approach. And this is, so what you have to do then, you've got your three pairs, you will have your chart set up. Hopefully you'll have something like the CSI, and you kind of have to ignore pretty much other currencies. The only thing you have to consider is that if you are, say, in cable, you will have to see what the British pound is doing, if you like, what we call in its complex. So yes, what is it doing in cable, which is maybe what you're looking to trade, but is the pound generally being bought or sold across the market? You know, what is Brexit doing to the pound at the moment? What's the fundamental news coming up? But your focus is going to be on your three pairs, and you will look at your charts, you will look at the time frames that you like to trade, and you will do your analysis on those charts, and you will put into play, you know, you'll use the tools, either the quantum tools or whatever indicators that you like to use, and you will really get to know these three pairs, so that every day or whenever you trade, you will go to them and you will soon begin to get a feel of what moves those currency pairs, what is going to impact the price, and you will then develop a set of tactics, if you like, so that when it's in congestion, you know, you recognize congestion, and you will recognize maybe, is it time to go in? Is it time to maybe sit on the sidelines? Now, if you restrict yourself to one or two or three pairs, the issue you have to confront is possibly one of boredom, because there's always something going on in another pair somewhere else. So you have to sort of be very focused and say, no, these are my three pairs, or one or two or three, but certainly perhaps more than one, because the issue of boredom really does kick in. But I have to tell you, there are traders out there who just stick to one pair, either perhaps something like a euro, a yen, or certainly the pound yen, because there's a lot of volatility in those pairs. And if you are going to do that, then you have to develop a range of tactics. You have to say, I recognize that the pair is in this particular phase of the price cycle, therefore I have to apply this particular tactic. This is the only tactic that will work, because the pair is doing what it is doing on the chart. The other option you have, which is probably probably what more David and I are used to doing, and that is simply because we've been at it for so long now, is we start with something like the CSI and we are totally agnostic about the currencies and currency pairs. We simply are looking for an opportunity, and we say, yep, today the dollar is being bought. Okay, what's it being bought against? Right, I'm going to buy it against this other currency. We simply look at them at a pair that is going to deliver the best trade possible. As I said, but we have a 28 to choose from. And as I said, you may move to that later on as you become more experienced, or you simply restrict yourself and say, no, because I'm only starting, I'm going to focus on this, this select number of pairs. And in doing so, you then don't have to worry so much about all the fundamental news. You simply focus on the news that is appropriate to the currency and currency pairs that you are looking to take a trade. So for example, obviously yesterday we had the FOMC minutes, and what's interesting about the FOMC minutes is with the US dollar, it's always been a political currency, but there is no love lost between the Fed and Donald Trump, and it's quite interesting that he's kind of taken on the Federal Reserve. He made some very rude comments about Janet Yellen, didn't he, David, in his campaign before he became president, and that is really not going to end very well. And interestingly, if you're interested in this kind of thing, the people always comparing presidents and who is he most like to the ones gone by, and there are a lot of parallels between what is happening with Donald Trump and what actually happened with Richard Nixon, and that didn't end well for Richard Nixon either. But Richard Nixon, actually, if you look at his record and what he did especially with China, we have the world today primarily because of what he instigated during his presidency. But we all know what happened to him, and he got tripped up by Watergate and etc. etc. So that's quite interesting. But what's interesting about the FOMC is they actually make a point of saying that they're very concerned about the escalation of trade disputes. So as I said, if obviously the dollar is always going to figure in one of the major currencies, and if you are going to be doing that, then clearly you have to have a look at the dollar index. Now on the XM platform, I only have this as a demo. This is not my live account. They actually offer a version of the Dixie, which is brilliant. We also have developed a Dixie indicator for MT4 and MT5, the platforms that don't offer this as an instrument in itself. And you can see here what happened. This is the overnight where the dollar buying actually came in. But just want to go back to the CSI and the two time frames. David was looking at you had the 15-minute up, didn't you, darling, with the 15-minute chart? Yeah, we had some dollar selling on the 15, and the importance of looking at multiple time frames, and that is we have some dollars. The dollar selling is obviously on the 30, and you've got the euro, which looks to be rising. So if that was your euro, you say, okay, what's happening to my currency and my currency pair? Well, it's quite clearly there's dollar selling, euro buying, and here we have it on the 15 as well. And also the Aussie, as we said, the Aussie got sort of beaten up overnight, and like everything else, it is having a bounce back. So let's go and have a look at the Aussie dollar, and I've actually got it on a Renko, my workspace here. Have you got it here as well? Yeah, no, I'm just going to open my Renko again. Let me just close that off. This is the way we've developed this. Yeah. Can I just show this as a right? This is the Renko indicator that we've developed, and I actually have it applied to a chart. And what I do is we have an option with this indicator, which is absolutely brilliant, and that allows you to put proprietary and standard indicators on the chart. We've optimized it, and no one else has been able to do this for MT5. And what I do, I just go open Renko, close down. This is where it sits. It has to sit on the 1 minute chart. I just close that 1 minute chart down. I'll just put my template on. There we are. That's it. Sometimes it's easier just to open a fresh one and then try and wait for the one that's on my workspace to come up. And this actually perfectly explains what we mean by when we looked at congestion. We have a very strong trend lower. Then we went into a minor congestion as waiting for possibly a reversal, another congestion, and this is what we're seeing reflected in the CSI. We're seeing this move higher. Now, whether that's going to continue or whether that's just a minor correction in this longer term trend, everything is tradable. It all depends on what you are looking to do with the information that the charts present to you. But if the Aussie dollar is your pair, this is what you would be focusing on. You would say, okay, what's happening in the background? You would obviously look at the context of the price action in terms of the fundamentals, and clearly more and more with what is happening on the political landscape. And it seems to be political both for the US and increasingly for the Aussie dollar. And there was one other factor that you have to look at is the are the option expiries. Do you want to come over to you?
Yeah, no, just leave that.
Leave that? Yeah. Yeah.
Just to pick up on that Renko chart and a couple of things. First of all, with regard to all the Renko indicators we develop, you do, of course, have the ability just to set the brick size as you would on a normal Renko, but more importantly, what we've extended the functionality to deliver the optimal setting for the brick size in all markets. In other words, it works on something called ATR, average true range. And whatever market you apply it to, the indicator, and this applies whether it's MT5, MT4, or indeed on NinjaTrader, it will deliver to you the optimal setting for the market you are trading. So you don't have to guess. You don't have to think, well, you know, shall I go for 2 or 3 or 4? What shall I set the brick size to? It delivers it automatically. So you're always trading at the optimal speed that the market is moving at, because the markets speed up and slow down. That's the whole essence of non-time-based charts, which we'll cover in more detail in another webinar. But the whole essence is that you do see momentum. Now that comes with a caveat, if you will, because if momentum's speeding up and slowing down, if you're just trading a fixed brick size, sure, you'll see the momentum, but you'll never know whether your chart is actually in tune with the market. And that's what the Renko does. It delivers you the optimal setting. The other point I'd also make about this chart, which really highlights it very strongly, is that we always recommend that our customers buy the trend dots and the trend monitor because they work in tandem together so beautifully. And the Renko chart's a great example. The trend dots will always transition first because they are the closest to the price action. You can see there the trend dots themselves have transitioned from the bearish red, they've gone into blue, maybe they're moving into grey, but they will change pretty quickly because they are at the live edge, if you like. They're at the face of the market. The trend monitor takes a more considered approach. You can see there the transitional change from bright red into the darker blue, through into even bright red again, and then we've gone into darker blue, then finally we've gone into bright blue, and now we're in a sort of transitional phase perhaps. But the point is this: the trend monitor will always take a more considered, it takes a longer term view of the trend, in other words, so it doesn't change so quickly, whereas the trend dots do. And that's why you need to use both of them together, because they're just so complementary to one another. And the Renko chart is a great example of how to use them there. I'm just going to pass back to Anna.
Okay, right. We're actually going to stop there because we're coming up to 8 o'clock, and this is just, you know, we started on these topics, and we are going to carry on in the upcoming sessions. I think we've got this series down till October, isn't it, David? Yep. Yeah, because otherwise the webinars just become too long and the videos become too long. So we kind of stop, and then we will pick it up the next time that maybe you come along. And there will be a recording, and they, as I said, they'll either go up on the they're both my YouTube channel and the Quantum Trading channel. But we have actually run slightly over, so I do apologize for that. Very, very quickly, can I just go through this, because I know there are people who have only become maybe the for the first time. Option expiries. Option expiries are, you have to see them at something like Forex Live, and they are exactly that. There'll be a strike price that the option, we don't know what kind of option it is. All we know is that you know, one of the big banks out there have a vested interest either in the price reaching that strike price or not. So they will also act as a magnet, if you like, for price action, and the option expiries are at the same time every day. As someone's no, we're not actually back later on, so we are actually back next week, not later on. We've only got one session today. Right, first quickly, quantumtrading.com is where more information on all the indicators. You can buy one. We have discounted bundles, and if the bundle's not there, you email us and we'll put a special price for you together, or you can buy the complete package. It's a lifetime license, or upgrades are free, and there's a 7-day money back guarantee. You get 24/7 support, 365 days of the year, and you can transfer from one platform to another. If you invest in the full package, whenever we develop a new indicator, they are added to your package for free. Don't actually pay us anymore. So it's 894 for MT4, MT5, or 1197 for Ninja. Ninja, we've got slightly more indicators and they're slightly different. And you can buy outright on or on what we call EPP. This is where we are today. This is where we broadcast from. This is actually from the education site, which is quantumtradingeducation.com. The actual program includes all the indicators, and then you have your videos, your PDF downloads, and it's a self-directed course. As you can see, it's 1391 for MT4, MT5, 1694 for NinjaTrader N7 or 8. And we are developing other platforms, and the program, and that's also on MPP, and that's about 50 hours of videos, video podcasts, and 13 PDF downloads. And we also have this little group, what we call Trader Chatter, and that's where that screenshot that you saw came from. Traders are encouraged, we encourage them to interact. You can ask questions there. David and I go in there with support questions, for support, and just generally just, you know, try and help you in your learning curve, as it were. And these are the 3 sites. Quantum Trading Education. You can email help desk there at Quantum Trading Education. You can email me, Coulling.com, or helpdesk@quantumtrading.com. Right, and I think there's a question from is there a place are teaching? Christopher, primarily online, as I said, through quantumtradingeducation.com. David and I I think we've got one offline event that we're going to do, but I think it's going to be in Dubai, so that's going to be in March. We haven't actually planned anything for the UK. We've been asked to, it's one of these, you know, one of these companies that put shows on all over the world, and I think the only one we can look to do is in Dubai. So I suppose if you want to fancy coming to Dubai for a holiday, I don't know. So anyway, thank you so much for coming along. I hope you enjoyed it. As I said, we don't have a session this afternoon. There's various reasons why we can't hold one, but we are back. Now, we are changing the day next week. We are going to be here on Tuesday because we've got other things that we simply can't do Thursday, but it helps to mix it up, and we get a different price action, different kind of drivers for the price action, and hopefully you can come along then. Anyway, enjoy the rest of the trading day, enjoy the rest of the week, have a great weekend. It's a bank holiday here in the UK, and we'll catch you next time. Take care. Bye.